Amazon just dropped $25 billion in bonds. Not to build warehouses, not to fund logistics, to build AI infrastructure. This is the largest corporate bond issuance tied directly to artificial intelligence in history, and it changes the game for every AI stock on the market. Here's what it means and which stocks benefit most. Let's break down the deal itself. Amazon issued $25 billion in investment-grade bonds across multiple maturities, 5-year, 10-year, and 30-year tranches. The 5-year tranche priced at 45 basis points over treasuries, the 10-year at 55 basis points, and the 30-year at 70 basis points. That's extremely tight pricing. It tells you one thing. The bond market believes in Amazon's AI strategy. Demand exceeded supply by 3 times. Over $75 billion in orders for a $25 billion issuance. This wasn't a company desperate for cash. This was a company locking in cheap capital while rates are favorable to fund a massive AI build-out. So why does Amazon need $25 billion in debt when they're sitting on over $70 billion in cash? The answer is simple. AI infrastructure is astronomically expensive. Amazon's capital expenditure for 2026 is projected at over $105 billion. That's up from $60 billion in 2025, nearly double. And the majority of that spending is going to AI. We're talking about custom AI chips called Trainium, massive data centers optimized for AI training, networking infrastructure to connect thousands of GPUs, and the energy to power all of it. Amazon's AI revenue run rate hit $12 billion in Q1 2026. That's tripled from a year ago. But to keep growing, they need to spend. And they're choosing debt over diluting shareholders. Amazon isn't alone. This is an arms race. Microsoft is spending $80 billion on AI infrastructure in 2026. Google's parent Alphabet committed $75 billion. Meta is pouring $65 billion into AI data centers. That's a combined $325 billion from just 4 companies in a single year. And it's accelerating. Last year, these companies spent a combined $190 billion. This year, it's $325. That's a 71% increase in 1 year. The AI infrastructure build-out is the largest capital deployment cycle in technology history. Bigger than the internet build-out. Bigger than the cloud transition. And the companies supplying the picks and shovels are the ones profiting most. When Amazon raises $25 billion to buy AI chips, who benefits? NVIDIA. They control over 80% of the AI training chip market. Amazon is one of NVIDIA's largest customers. In fact, Amazon's AWS reserved over $16 billion in NVIDIA GPU capacity for 2026 alone. But here's the nuance. Amazon is also building custom chips. Their Trainium 2 processor is designed to reduce dependency on NVIDIA. It won't replace NVIDIA entirely, but it creates pricing pressure. NVIDIA's response. They're moving up market. The B200 and B300 chips are 2 to 3 times more powerful than previous generations, and they're pricing accordingly. Average selling prices have jumped 40%. NVIDIA's data center revenue hit $35 billion in Q1 2026. That's up 93% year over year. The AI arms race is NVIDIA's fuel. Microsoft's $80 billion AI spend isn't just about Azure infrastructure. It's about maintaining the OpenAI partnership. Microsoft invested $13 billion in OpenAI, and they're building the infrastructure to run GPT-5 and beyond. Azure AI revenue grew 62% in Q1 2026. Copilot, their AI assistant, now has over 4 million paid subscribers. That's up from 1 million just 6 months ago. But here's the risk. Microsoft's AI spending is largely predicated on OpenAI maintaining its lead. If open source models like Llama or Mistral close the gap, Microsoft's massive infrastructure investment becomes less differentiated. The bond market sees this too. Amazon's tighter pricing suggests the market views Amazon's AI strategy as lower risk than Microsoft's concentrated bet on OpenAI. Google and Meta are spending big, but with different strategies. Google's $75 billion is split between training Gemini, their frontier model, and building TPU chips, their custom AI hardware. Google has a unique advantage. They design their own chips and run their own data centers. That gives them cost control that Amazon and Microsoft don't have. Google Cloud AI revenue hit $8.2 billion in Q1 2026, up 45%. Meta is taking a different approach. Their $65 billion is focused on open-source AI. Llama 4 is free for anyone to use. That's a strategic move to commoditize the model layer while profiting from the infrastructure layer. Meta's AI ad revenue impact is already visible. Ad targeting precision improved 22%, driving a 15% increase in ad revenue per user. The AI spending is directly translating to revenue. The bond market is the smart money. And what Amazon's bond sale tells us is significant. First, the 3 times oversubscription means institutional investors are betting heavily on AI infrastructure. They're not just buying Amazon bonds. They're positioning for the entire AI capex cycle. Second, the tight pricing at 45 to 70 basis points over treasuries means the market sees Amazon's AI bet as low risk. Amazon has a track record of monetizing infrastructure. AWS proved that. Third, the fact that Amazon chose debt over equity means they believe their stock is undervalued. If they thought shares were fairly priced, they would have issued equity. By using debt, they preserve shareholder value while accessing cheap capital. This is a bullish signal for Amazon and for the broader AI infrastructure theme. Let's look at what Kronos, our AI prediction model, is forecasting for Amazon over the next 30 days. Amazon closed at $198.42. Kronos projects a move to $208.63. That's a 5.1% upside. The model factors in the bond issuance catalyst, seasonal patterns, and the broader AI capex trend. The key resistance level is at 205. If Amazon breaks through that, the path to 210 opens up. The probability distribution shows a 62% chance of upside from current levels. The risk-reward favors the long side here. The bond sale removes a funding overhang and signals management confidence. NVIDIA is the direct beneficiary of Amazon spending. Kronos sees further upside here. NVIDIA closed at $142.18. The 30-day target is $156.74. That's a 10.2% move. The model captures the demand acceleration from Amazon's bond-funded purchases. NVIDIA's earnings are coming up in late August. The whisper number is above consensus, and the options market is pricing in an 8 to 10% move. Kronos puts the probability of a positive move at 71%. The main risk is if Amazon's Trainium chips gain more traction than expected. But for the next 30 days, NVIDIA looks strong. Microsoft presents an interesting case. Kronos is more cautious here. Microsoft closed at $467.22. The 30-day target is $478.91. That's only a 2.5% upside. The model reflects the concern that Microsoft's AI spend is more concentrated risk. OpenAI dependency is a headwind. Copilot growth is strong, but not enough to offset the massive capex. Kronos assigns a 54% probability of upside. That's barely above a coin flip. The key support level is at 455. If that breaks, we could see 440. For Microsoft, the risk-reward is less compelling than Amazon or NVIDIA. Google is the value play in the AI race. And Kronos agrees. Google closed at $178.55. The 30-day target is $189.12. That's a 5.9% upside. The model likes Google's vertical integration. They design their own chips, run their own data centers, and have the search monopoly to monetize AI. Google Cloud is growing fast, and the antitrust concerns are largely priced in. Kronos gives Google a 65% probability of upside. The key catalyst is the next earnings report where cloud AI revenue could surprise to the upside. Google is the safest bet in the AI infrastructure trade. Meta is the wild card. Kronos sees upside, but with higher volatility. Meta closed at $582.31. The 30-day target is $612.44. That's a 5.2% move. The open-source AI strategy is clever but risky. If Llama 4 gains enterprise adoption, Meta could become the AWS of AI models. But if enterprises stick with proprietary models from OpenAI and Google, Meta's $65 billion spend becomes harder to justify. Kronos assigns a 58% probability of upside. The option's implied volatility is 35%, the highest among these 5 stocks. Meta has the most upside potential, but also the most downside risk. So what does this all mean for your portfolio? Amazon's $25 billion bond sale is a confirmation that AI infrastructure spending is accelerating, not slowing. The companies that benefit most are the chip makers and the cloud providers. NVIDIA is the primary beneficiary, direct demand from Amazon's bond-funded purchases. Amazon itself is well-positioned. The tight bond pricing validates their AI strategy. Google offers the best risk-adjusted return. Vertical integration plus the search monopoly equals durable competitive advantage. Microsoft and Meta are higher-risk plays. Microsoft's OpenAI dependency and Meta's open source bet both carry execution risk. The trade? Overweight NVIDIA and Google. Equal weight Amazon. Underweight Microsoft and Meta until we see more clarity on their AI monetization paths. Which AI stock benefits most from Amazon's $25 billion bet? Drop your pick in the comments. And if you want to see how Kronos predicts these stocks will move over the next 30 days, hit subscribe. We run predictions on every major AI ticker. The data is clear. The AI infrastructure build-out is the biggest capital cycle in tech history, and it's just getting started. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor.